London, Reuters, world shares inched higher on Tuesday, eking out limited gains as investors kept a wary eye on a U.S. inflation reading later in the day that could offer clues on the pace of Federal Reserve interest rate hikes this year. The MSCI All-Country World Index of Stocks, which tracks shares in 47 countries, was up less than 0.1% by 11:49 GMT. The index has recovered about half its losses during a shakeout in stocks in February. The sell-off came on the back of strong U.S. wage numbers, which investors feared might feed into inflation and push the U.S. central bank towards a faster pace of monetary tightening. Raising its global growth forecasts, the Organization for Economic Cooperation and Development, OECD, said the Fed would probably have to raise interest rates 4 times this year as inflation picks up. U.S. Consumer Price Index, CPI, data is due at 12:30 GMT. A Euro trademark SCPI inflation data is likely to add further color to the U.S. inflation picture, however it probably won't a Euro trademark T add any further clarity to the overall inflation outlook puzzle, given that the Fed doesn't a Euro trademark T use CPI as its inflation benchmark. A Euro, said Michael Hewson, chief markets analyst at CMC Markets in London. A Euro Enonetless is still a useful gauge in establishing when and how the price pressures we Euro trademark VE been seeing build up in US supply chains start to filter down into the wider economy. A Euro. While the Consumer Price Index is a popular barometer of economic health, it is not the primary gauge the Fed uses to measure inflation. Instead, the Fed uses the Personal Consumption Expenditures, PCE, index. The Pan-European Stoxx 600 fell 0.1%, trimming earlier gains. Earlier in Asia, MSCI Euro trademark's broadest index of Asia-Pacific shares outside Japan. MIUP J0000 Plus was up 0.2% after spending much of the day swerving in and out of negative territory. The index surged 1.5% on Monday following firm U.S. jobs numbers on Friday, while low wage growth eased concerns about inflation and faster central bank rate hikes. But a mixed performance by U.S. shares overnight tempered the rally. The S&P 500. SPX and the Dow. DJI slipped on Monday as the U.S. tariffs signed into law last week weighed on industrials, while a rise in tech stocks boosted the Nasdaq. IXIC to a new record high. Wall Street was set to open higher on Tuesday. ESC1.N. Politics pressures yen, boosts Slovak bond yields. In currencies, the Japanese yen fell over 0.5% to a 2-week low against the dollar, pressured by a political scandal engulfing Japanese Prime Minister Shinzo Abe. A Euro trademark's government. It also lost ground to the euro. The yen tends to suffer in an environment when riskier and higher-yielding assets are bid, but Morgan Stanley strategists said in a note that a further deterioration in the political situation that affected the position of Abe could see the yen-euro forcefully return towards its previous upward trend. A euro. The dollar index. DXY, which measures the greenback against a basket of currencies, was up 0.1%. A euro broader story remains that of U.S. monetary policy normalization in the backdrop of an improving economy, and a further decline in currency market volatility would only fuel more risk-taking appetite. A euro, said Commerzbank Euro trademark SFX strategist Thursday. Lan Nguyen. Slovakia. A Euro trademark's 10-year bond yield rose as much as 5 basis points, and the cost of insuring exposure to its debt hit the highest in almost 3 months as the government inched towards collapse. The benchmark 10-year U.S. Treasury note yield US 10 YT equals RR stood little changed at 2.879%. U.S. crude futures CLC1 were down 0.2% to $61.27 per barrel. Brent LCOC1 also fell 0.3% to $64.77 per barrel. Spot gold fell 0.3% to $1,318.78 per ounce. XAU equals